In this video, I'm going to be going over daily bias and how you can use it in your day-to-day trading strategy. If you're a beginner trader, make sure to watch this video till the end. And if you haven't yet, be sure to watch my previous videos to get a better understanding on how you can use all the concepts within your trading plan. Let's get started. So the key information is if the candle closes above a high, then the market is bullish, and if the candle closes below a high, the market is bearish. So let's go over a bullish example. So what can we see? We can see this high right here. I'll change the color. So this is our high, and what happened? The candle closed above the high. So what we can anticipate in the market is the next candle opens as a bullish candle. So the next open, we can see something like this, and that's most likely the bias. So what you'd be looking to do is take a buy position. Obviously, you don't take it just based off of daily bias. You'd obviously incorporate stuff like fair value gap, market structure, etc. And those are on my previous video. So if you don't know what they are, be sure to watch my previous videos. Now, the next example is a bearish example. So I'll just so the bearish example, what can we see? As it says here, close below a high equals bearish. And what did price do? You can see this candle closed below this high. I'll mark that out for you. So most likely what happened here is a liquidity sweep. So once that liquidity sweep happened, price closed below. So what can we anticipate happens in the market next? Well, our bias is bearish, so most likely price will close below, possibly coming and taking out this low right here. So we can stretch this out and get a wick. And that's the most probable thing that is going to happen in the market. Now that you got a better understanding of daily bias, I'll be moving over to a live example on NAS 100 and showing you exactly how to apply the daily bias. Right guys, I'm going to be moving on to the example. So the first example is going to be how to take buys of a bullish daily bias. So remember what I told you guys, if it closes above the high, it is bullish. If it closes below the high, it's bearish. So marking out this high, as you guys can see, the candle closed above. So what we do is drop down to a lower time frame. So I'm going to drop down to the 5 minutes time frame, and let's see what we can spot. Let's zoom into the chart. And the first thing I can see is a fair value gap. It's not a very clear one, but it's a fair value gap. So we're going to mark this out, and we're going to place a limit order for a long position. So I'm going to put my long position right here. Stop loss just below right here. We'll do it here. And aim for a simple 1 to 2 risk to reward. So this should be a very easy trade, a very high probability trade. As we can see, fair value gap. We can also see overall uptrend. If you watch my market structure video, we're making higher lows and higher highs, and we got a bullish daily bias. So let's see what happens. So as you guys can see, we're now tapped into this trade. I'm just gonna make this longer. We're tapped into this trade. Let's see how it goes. And just like that, we hit take profit. Let's see what happens if we continue to hold this trade. And as you guys can see, it's just absolutely sending. That is absolutely insane. So if we were to have continued to hold, that would have been a 1 to 8 risk to reward trade. But like I always say, if you're trying to pass a funded account challenge, just aim for 1 to 2, quick and easy. You won't have to hold for long. And yeah, so if we actually go into the daily time frame right now, as I showed you guys in the example, we closed above, it was bullish, and as you guys can see, we just giga candled, and we took out all this liquidity right here. Right guys, we are now on a bearish example for daily buyers. As you guys can see, this candle closed below this low right here. I'll mark it out. So my overall bias is bearish. Let's see what happens. So the first thing we're going to do is drop down to a lower time frame. And what I can see already is we've already tapped into this fair value gap. So most likely price is going to go down from here. So what we're trying to do is catch a retracement. So what we're going to wait for is maybe a fair value gap to appear for a re-entry. So let's see what happens. And I can see a small fair value gap created right here. So I would take off a trade based off this extreme fair value gap. So I'd put my short position right about here, and my stop loss would be slightly higher as it is an extreme fair value gap, meaning it's a very tight one and we could easily get stopped out. So I'll put my stop loss right here and target a 1 to 2. Okay, let's see what happens. And we're now tapped into this trade. Let's see what happens. And just like that, we hit take profit. But let's see what happens if we continue to hold. Already, if we were to have held, it would be a 1 to 5. And again, we've dropped even harder. And that would have been a 1 to 10. But like I said again, guys, just aim for your 1 to 2. In and out, quick and easy trade. Make a quick 2% on your account, risking 1%. And if we go back to the daily time frame, you can see how heavy that drop was. Now, I hope you enjoyed this video. Make sure to join my Telegram down below. I'll be doing trade breakdowns, and yeah, you can follow along with my trades. Nothing is financial advice, but yeah. If you enjoyed this video, make sure to comment down below, subscribe, and like. I'll see you in the next one.